The following is a presentation of TFNN. The Global Market Pulse. With your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And we obviously had some volatility yesterday. I don't have to tell you guys that if you were trading, and we've got it continuing today. This is the type of environment where you more than likely want to, lighten up, make sure the stops are in place when the vol kicks up this high. And we're pretty much all over the place. So we're trying to make some sense of this with, the market breadth and in volatile times, we're going to get jerked around a little bit. And, you're going to be able to catch waves, day trading for sure. But position trading in this type of environment, I don't have to tell you guys is, and thanks for telling me that this environment was coming. I'm sure somebody's saying that. But as you look at this and as you look at the VIX creep up, you've got to be able to kind of go with the flow as far as, like I said before, lightening up a little bit on the position sizing and possibly waiting until some things settle down a little bit before you start digging in and taking any serious positions. Now, in a very volatile environment like this, the day traders, this is a dream, and you can compress the time frames into a real small area. And a lot of points happen in that small time frame, and this is the guy. But in a low vol environment, those type of guys get chopped up quite a bit because the moves aren't as drastic in a small time frame, and that's kind of what they're counting on. And a lot of people have to cover before the end of the day, and blah blah blah. But covering before the end of the day yesterday wasn't a bad idea. Here's the situation on the S&Ps. We've actually come back down this morning into 1996.25. We talked about the ultimate buy point on this was going to be 1994.70. And we also talked about that 2027 area. Now, yesterday, I think the statistics were since 2008, we've never had a market go up that far and come back that far, or like a daily range that big. I mean, yesterday's daily range was, and this is kind of close to close, if you will, on the S&Ps, had a high of 2051 and a low of 2001. So that's pretty much the equivalent of a 500-point Dow range for the day. And we were up significantly yesterday. And we talked about, as we opened, getting above 2027 and being long. And that was, I think after we talked, that was worth about 20 or 25 points on the upside. But then, unfortunately, we had a 50-point downside, and that's what stops are for. I actually tried to pick a battle around the 2027 area, but when we're up that far and then we come back almost down to where the day opens, so to speak, those are pretty harrowing experiences for people who bought that, move up. And those crossovers almost have to happen. You don't get a free lunch a lot of times when you open, go above these inflection points, go up significantly, i.e. 300 points here, and then come right back down to ground zero. Usually you're going to stop some people out who have played that game during the day. And, I tried to pick a small battle around 2027 again and not trying to get back too much, using the 240s yesterday. And I'm just going to kind of show you how this panned out. There's that 2025, 2027 area breakout, and then the 240s kind of allowed me to say, you know what, all bets are off for a while. Around 246, I actually started looking at this from the short side, but didn't do it. And I'm just giving them a little bit of education of my mindset in a volatile day like that. And we're just waiting patiently. Tried the 2027 area again, and then that's what stops are for, basically. This is our 240-minute grid, by the way. Yeah, this is a day trader's paradise. And but we've talked about using this, and again, these are kind of exceptional times. Our breadth calculation is still positive on our long term, and the dailies and the 240s and 60s have crossed over. You can use these intraday if you've got this product to try to regulate what's going on with a certain index. And there's a couple of videos on the TFNN site about that. But these are pretty exceptional times, not to beat a dead horse and say that a zillion times, but you've got an inflection point here after 2027. These are the stronger inflection points. And sometimes it's a good idea in these volatile times, if you're not day trading on a 30-minute, 60-minute type swing indicator type arrangement, it's prudent sometimes to sit back and just wait for these inflection points to happen. And these inflection points, and wait for the market to come to you, I guess is the name of the game. These inflection points here at the S&Ps, there's at 1994. Here's where the market is right now. There's at 1994. And again, we've reached a low this morning of 1996. So we've gotten very close to there, and we've actually rallied about 10 points off of that area. We're at 2,475 now. So again, our automated trading systems and signal delivery systems really are based around the highest probability situations that we can hopefully arrive at to deliver a signal. And that general area right there, we give, especially in volatile times, we actually set in volatile times when there's high volatility, we actually set these triggers to trigger off these areas for reversals, or taking this into consideration on a long-term basis after a big pullback like that. We set a percent volatility of the width of the box. Now, as you can see, this daily box, we had, again, just to kind of review what really is going on here, we had a box appear, a profile appear, if you will, right? We were indicated there, and then we had this box appear here, and that box appeared extremely tall or wide or thick, however you want to look at it. And that means that we're going to have some volatile times, right? That's a predictor, but it also means that in our so-called systems, if you will, you're going to have to give yourself a little bit more room, and the percent triggers on the automated systems and the signal delivery systems are based on, let's just say, 5% within on either side of this particular range. And then actually the stops are relaxed a little bit too because of that volatility. And that kind of takes care of some noisy things that may or may not happen around these inflection points. Now that's pretty damn close, actually. 1996 and the unfair highs were rounded off 1995. All right, so that actually almost was to the tick. But you want to give yourself a little bit of room around these things. And again, you can grab that information right off the scanner here and hopefully patiently wait, if you do get stopped out of a situation like 2027, that the next big leverage point on the dailies, which is again what a lot of our automated signal delivery systems are based around, with other leverage indicator information combined in here to give a little bit of a skew either way and a biased opinion either way. 1995 rounded off was again the next battle point, if you will. Now the long-term trend, in my opinion, obviously I don't think anybody can probably argue with this, is still in force on the north side. All right, we've got a lot of earnings coming out. Market's paying attention to quite a bit. It's suffered through a dramatic pullback in oil. And let's just check oil while we're talking about this. And we were talking about if oil just stops going down, for just doesn't necessarily bounce, but just stops going down, we may have a little bit of a market happiness here. Oil, we talked about this yesterday and the day before. We got that close below. So okay to be short, not okay to be long at that stage. We were trying to pick some battles, getting a new demand area that happened down here back on Friday. We were talking about enough's enough, but obviously that's not the case, and that's what stops are for. And again, we got that close below, and we're just sitting down here with kind of zero reasons to really try to pick any battles on the long side. And there's the 240s. Short-term traders on oil, by the way, 46.82 and 45.51. What is my general feeling though on the S&Ps after referencing oil? Let me just pull that back up. general feelings right now actually are stops below 1995 based on your appetite for risk, and we may get a retracement back up into this 2027 area. All right, so but right now, that being said, if you're just waking up and are not in any positions, you've got you've got really nothing to hang on to down on the 240s down here. And if you're going to position trade, we've obviously just really had a wild time this morning already. We've been as high as in the last, let's check that when the last eclipse was here. 1, 2, 3, 4. Yeah, I was going to say 4 hours there. In the last 4 hours, we've had a range of almost 20 S&Ps, and that's been a pullback after kind of a sitting up on the perch up there. So short-term traders, I'd actually like to see another profile up here, and guess what? This on our 240s, and guess what? If you got the scanner, you'll see that will appear. It'll be a kind of an orange situation, sell for a little while and actually give you some new inflection points. And you can actually set the scanner to alert you to that. As I look at the breadth here, I'm going to go in here and say, okay, let's just say that I'm going to do this. Find that. Actually, let me find this a different way. Shoot. Well, actually, I'm going to have to look into that. I don't know why that's not coming up there. We may be resetting something on the server. Well, let me find it another way. Hold on. Let's choose futures. And you can set this. There it is. There's the S&P minis. I knew it. Why did that come up late? Anyway, you can set this basically to alert you of when, and let me just pull this up, 240, new box, boom. It's going to alert me when that happens and throw that right in there, and the S&Ps will come up. So you can alert yourself of when new demand or supply areas are coming up on the scanner. And that's what this thing's built for, is to hopefully not miss trades, but you can kind of really narrow it down. You can see the 10-year and the 30-year are obviously having new 240 areas attempting to appear, new demand and supply areas attempting to appear as well as the NASDAQ. So as we look at this, we've got nothing attempting to appear here and no new levels on the short term. We're going to be back in about 5 minutes, folks, and try to cover quite a bit today.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And as we're talking about the S&Ps and all, we've got to talk about the other thing that's constantly in the news. And let's talk about the 10-year and the 30-year. Nothing changing here. This is about a 10-second conversation, long and strong. And with the volatility S&Ps up or down, this thing seems to weather all storms on the downside. Here's the 240-minute numbers, just to reel these off here in case you don't have the scanner. 128.20 up top and 129.18.19 up top. Now, you know, is this thing going to continue to climb? Who knows? But the cool thing is on the long-term trade, as you can see, when we started ramping past that 126 area, 126.06, 126.02 on the dailies and weekly situation on the March contract, there hasn't been a lot of reasons to not buy. Well, we had one little disturbance there around the first of the year, literally. That was it, where you kind of had the regulation of this trade stop for a second, but then we're back in business. And that was literally a retrace back on the daily situation. And the 240s have not allowed you to really have any technical damage here. We've actually found support a couple of times and gathered ourselves as the market was rallying, actually. But the technical damage, there's the good news is you're eliminating one side of the marketplace again. It's okay to be long, not okay to be short. And that okay to be long situation, we may get some new supply areas happen on the daily if we get a big pullback. But right now, again, I don't see any reasons to get out of this trade. And stops, again, these boxes are pretty wide here on the short term on the 240. Stops have to be below 128.20. I know that's a full handle below where we're at right now, but it looks like the 10-year really is boundless on the upside right now. I'm not jumping on the bandwagon late here. We've been talking about this since recently. Around this 126 area, get back above profile unfair lows and never looking at this actually from the short side. I mean, it's just been, so that's the situation on the 10-year. I know that sounds crazy. I know probably Jimmy Rogers has been short since 5% 10 years, but again, I think this thing is this thing is just it's endless on how far this thing can climb, just like how low oil can go. Actually, we talked yesterday about oil possibly going into the 30s. It could go into the 20s, folks. I mean, commodity trading, extensions and overreaching traders can drive things to endless heights or valleys. So be prepared for that. Gold, a couple other just tidbits here on some things that we normally look at. We got past that 1218, 1219 area. That was huge. Haven't had a close on a weekly below there. Here's the daily situation on gold. We've talked about trying to, again, if you haven't been watching the show, trying to get long above 1200. That's been a little nerve-wracking at times, and letting the 240s kind of regulate you out, but I'm still a big fan of staying long gold right now. And here's the 240 situation. I actually was trying to pick some battles around 1228 this morning, 1229. Hung in there because of just the long-term view, and now we're actually kind of back in the balanced area and hopefully headed north on this. But short-term stops need to be based on your appetite for risk on gold, around below 1228. Again, with a little bit of a buffer zone there, we found some good support on the way up, regulating this thing up. And long-term stops, unfortunately, way down there have to be below 1200. I mean, if we get below 1200, that's just going to kind of take the air out of this thing. So that's the situation on gold. We talked recently about almost like a lottery ticket trade on beans, on March beans, based on some information, some fundamental information that I was getting a hold of. We talked about targets down below on the dailies of 997 a bushel, but the ultimate targets on this haven't been met yet. The retest of 982, 983 looks like that's going to happen. Thank you guys from the elevator for giving us some good information on that, and kind of throwing the technicals out the window for a second. We talked about how do you trade something like this? How do you trade a news-related event? You possibly do an option strategy to try to buffer the volatility of that particular situation as it happens. And as we talked about that, we got that close the other day at 1052, and we are currently we actually went down about 60 cents since then in 48 hours since that happened. Well, less than 48 hours actually. So decent trade on beans there. But what do you do now? I think we're reaching some targets on beans. Again, we haven't reached them yet. The dailies happen, but 982 again is the target on beans, and 240s. We'll talk about that when we get back on beans.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Got retail sales numbers out, and they are worse than expected for sure. So what does that do to the S&Ps? We've actually dropped below that 1994, 1995 area. We're sitting right below there right now. Let's see, he's trying to text me here from all over the place. So right now, stops got to be in order here, and you got to break out on the downside. So you got to now look at more than likely 1994, 1995 as resistance on this. This is kind of the wave down, and the next target down on the downside could possibly be that 68 area again. And we've got our breadth will possibly turn negative on the weekly for the first time I've seen it since. And let's just pull this back. So again, that's what stops are for. Tried to pick a battle around that 1995 area that actually was worth about a 20-point move up, as you can see. But right now, that's stops are in order there, folks. So that's the situation on the S&Ps, and the easier trade, in my opinion, has been, just to kind of revisit this, the long bond and note trade. And that's held true. Got the breakout above that 129.18 area now, and that's kind of the way the ball bounces. Markets go up, bonds and notes go sideways, markets go down, bonds and notes go up, and that's been something just to lean on for a long time. And here's the 10-year trading above 130 again, just unbelievable. Not unbelievable, actually. It's just amazing. And we have eclipsed recent highs on this 10-year March contract. So again, we're going to probably float up here in the ether now, and Watch out below on this U.S. stock market. This could get super ugly here. And we are now, ooh, good Lord. Ooh, let's pull that back up. Sorry to do tick by tick here today, but we're going to have to pay attention to this as we were up 300 points on the Dow yesterday. And from that point on the S&P's 2050, we're trading, I guess within less than a half a day, we're down 65 S&Ps. Ooh, okay. All right. Well, again, that's what stops before trying to pick a battle there and getting a little ride up. And now we're breaking down below that 2,000 area. And it looks like this thing may drift a little lower. And again, 1968 will be the targets on this particular move. Let's take a look at the XLF really quick. And let's see what gold's doing in the middle of this before we do that. Yeah, gold's obviously moving north on news like that. Let me look at the gold situation over here really quick, guys. Got a lot of things flashing on the screen here. All right. So what do we do with gold? You got some short-term targets, 1244 up there. And the range is, again, 1228 up into 1244. And 1250 is more than likely going to be a target up top there on the daily situation to pay attention to for a while on gold. Why? You got that previous profile from the past up there. That's going to have to be something we have to get through and close above is 1250. And let me actually pull something up here really quick on gold. Well, okay, so that's the situation on gold, the 10-year. All right. Okay, so going back to the XLF. Sorry, guys, my computer's almost freezing up here. All right, so taking a look at the XLF, we talked about not being the long candidate here, and this morning pre-market we're trading looks like 23.53. We talked about this being a good short candidate based on the rate environment, and this thing looking as if it's, you know, the relative strength trade on the downside, the XLF. We talked about eliminating the long side on this particular trade. Now you've got the leverage point here, bottom of the box, 23. Actually, let me pull this up on the scanner. I can't even see it. Let's get rid of everything here. Let's see, get rid of that and pull up our ETFs. Well, oh, shit. Oh, excuse me. We still got our filter in. Hold on. All right, here we go. I was wondering why that was the case. And let's go down to the XLF, and that bottom is 23.87. All right. And there we are. This is really cool. It's real-time levels here. So 23.87, going to pay attention to that, putting stops above there, breakouts on XLF. And by the way, the super components of that particular, with news out this morning, earnings not in line, JP Morgan. Now you got some great technical damage here and stops to be oriented above that 61.40, excuse me, stops oriented above 58.86 on JP Morgan. Let's take a look at, let's see. And the cool thing is on the daily, you've got that 58.86 that we just spoke of. You've also got 59.19 as the weekly unfair lows. So you've got some serious technical damage right now, happening right now on JP Morgan. Wells Fargo, let's take a look at that. Again, not the rosiest news out this morning on Wells Fargo. Again, similar situation, 52.26. Now you've got technical damage definitely happening on these stocks, and 50.12 will be targets on Wells Fargo, and we may go lower, and we may have some technical damage on the weekly on this. So not to jump on the the short bandwagon, as we've already pulled back this morning completely, but you got, you know, kind of the weak stocks in a weak market that you can lean on here. Here's the S&Ps again, kind of rallying back a little bit off the noise this morning. But again, I think the 1995 area is going to be the leverage point, possibly. Any retraces back into that area could be sold. Here's the breadth situation on the S&Ps, and we've got to see how the market opens. But if the weekly crosses over here, we're going to definitely be in breadth technical damage situations here. So pay attention to that. Okay. On my notes here, I want to take a look at KBH. KBH stock in the news, obviously. And 1342 pre-market, and voila, technical damage below 1601. If you're looking at trading these earnings situations, you got to take a look at these levels here, especially on the long term. And now we're getting below the weekly infra low is 1415. So again, that's going to be something to lean on resistance wise. And they're just basically saying well, go read it. It's not good news. Obviously, the euro currency is liking this, being that retail sales slowing down U.S. economy may put a little bit of off in the euro, and we've got a little bit of a long situation you can finally possibly lean on, at least for a little bit here. We've been short the euro forever, since 135.52 if you've been watching this show, with not a lot of reasons to get out of that trade. But now it's it might be okay to be long in a contra trade with targets above 119.31 on the euro. Okay, but you can place stops below 117.90 right now. I'm actually going to look at the euro myself here really quick on another screen. Let me pull this up. Okay. Okay. And we want to take a look at the US dollar, because this thing obviously is pulling back a little bit. But you've got some support here on the US dollar around, on the short term, around 92.06. If this breaks, this is going to be a leverage point. Right now, the US dollar is just amazingly hanging in there, but we got to take a look. And again, this is the daily situation on the US dollar, sitting right at support. Now this is going to be some short-term technical damage, and I feel like the dollar may have a little bit of a wind out of its sails situation for a little bit here. So you may have to sit on the sidelines on that long trade. We've been long since around 81 on this product. Now this is the 240s regulating this in a way that you're going to have to sit tight. Here's the yen, taking it on the chin a little bit worse. We talked about getting the bounces off 118.19. This is also a situation where you're going to have to sit on the sidelines a little bit here on the yen. That was the daily. This is the daily, 118.20. Now we kind of, closed below yesterday. Not okay to be long here. Not okay to be long the yen. So if you've been long the yen forever, like we've been talking about, this close below yesterday was indicative, even before this report came out, that got to put your stops in on situations like that. It's tough not to be able to talk to you guys all day, by the way, because a lot of these things change during the day, but these are the inflection points to pay attention to. The DAX, let's see here. Okay. Let's see where we're at pre-market here. 98.49. Obviously, this is hanging in there a little bit because of the dollar situation. 97.2850. Pay attention to that level. That's going to be the breaking point here. You kind of in a range still, 97.28, but it's up to 98.50 on the DAX. Not a lot of leverage here, right in the middle of a fair auction on the dailies. So not paying attention to that right now until we get down to one of those inflection points to try to pick a battle on the DAX itself. Again, just going through the major movers here before the market opens. Let's take a look at the XLE. We talked on a free video the other day about trying to pick some battles on this and putting stops oriented around this bottom of the box, 74.18. We've reached a low this week of 72.88. So again, that's kind of a little bit too much pain right now. Crude oil may, the dollar coming back, crude oil may rally a little bit based on that. But again, you can't really get long this thing again until above 74.18 on the XLE. It was showing some relative strength relative to the crude market. That was something that just kind of popped on my radar screen. And right now, that's kind of a sit on the sidelines until we get back into the weekly fair auction, try to pick a battle on that north side for the XLE. We got to take a look at Apple. This is something that 109 pre-market. Here's the 109.70 area. So right now, again, we talked about major support at 105.64 for this. Let me take a look at what's going on here with these S&Ps again on another screen. And we rallied back right then. I'm just looking at intraday prices here. Almost back up into that 1994, 1995 area. It looks like we're just kind of sailing south a little bit here. But that's where you're going to have to orient stops now on the daily on the S&Ps. A couple other stocks that we want to look at here. I got some written down. Honeywell. Oh man, typed it in wrong. Here we go. Honeywell. Pre-market 97.87. 97.87. So we're getting back down into this 98 area and 98. Excuse me. Let's just back up for a second. 96, 93 weekly unfair highs, daily unfair lows 98. So you got a little bit of a DMZ there to pay attention to for Honeywell. This has kind of been something that has been hanging in there. Not a lot of volatility lately. If you're looking for strong stocks, you've got some support on that DMZ right now. And if this hangs in there, if the S&Ps get down to that 1968 area and this thing still stays within that DMZ or above, this may be something to pick a battle on the long side. But you've got to pay attention to the broad market breadth here as a guiding light to trade a lot of stocks in the S&P. This is especially the ones that are high beta. Let's take a look at IBM. 155 pre-market. Obviously, this is something we've been talking about from the short side for a long time, and finding any reason whatsoever to try to leverage sell the resistance trade. We got another breakout on the downside, and he closes below that unfair low 155.90. This is to be sold, and trying to find reasons constantly to sell IBM. I think Tom's a big fan of that too, so I feel like I'm on the right side there. Okay. Take a look at a couple other things that have been the weak stocks. Again, 38.85 Twitter, trying to find reasons to sell this. Targets down below 36.98. Ultimately on Twitter. We're going to come back in 5 minutes, guys, and wrap up the show and try to cover a couple of things.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. Talked about the euro possibly being the long trade right now, just as a kind of concentrating against the long-term trade south here. 117.90 stops down below there. We could reach targets above 119.31, exploring the entire fair auction above. The yen, just to revisit this, technical damage got to be out of this long trade, and that 118.20 had stops oriented around there. Just kind of pay attention to that, just to revisit a couple of things before the market opens here, the U.S. stock market, that is. And looking at, again, let's just take a look at the S&Ps. Guys joining late. A close below 1994.70 is going to be pretty damaging for the longs. This is first hint of technical damage in a long time for the dailies, and 1968 could be that target again, but stops, in my opinion, now could be oriented around that 1994, 1995 area on the upside. Excuse me, above there on the stops for shorts above 1995. I'm looking at a million things here. The dollar's getting that kind of getting a kind of a pullback here, and now you've got, again, a leverage point 92.06 sitting here on the 240s. Kind of got to be out of this trade right now, in my opinion, on the long side. Holding up relatively well, though, I might add. And again, looking at something, excuse me, on the DAX. Had somebody ask about this. Weekly levels These are huge ranges, right in the middle of a fair auction on the DAX. 10,123 up top and 9104 down below. So we're kind of focusing on 92, 97, 28, 50 down below, and obviously that was a little bit of a selling point. Looking backwards here, 99.58, but that's the range here on the DAX. And you know, if we start breaking down below 97, 28, 50, you're going to have some technical damage there. The NASDAQ, just to give some numbers here before we go to break. All right, here we go. 41.19 pre-market here. Here's the big time strong level here on the NASDAQ, 41.05 combined with 41.02 on the daily. So we're kind of stopping there right now, but if we start getting below there, we may hear a big whoosh sound on the NASDAQ. But right now you've got a little bit of support there. Okay. Gold continuing to plow north here. Talked about the initial targets 1244 above, and if we get a close above there, I mean, I think this thing could really move north. But 1950 is going to be something we're going to have to close above on gold to really look at this as a valid breakout. We've talked about this trading above 1200, and let's see here. God, man, there's so many things moving on my screen here. JP Morgan, again, Wells Fargo, JP Morgan, look at these XLF stocks to continue to possibly sell off here based on a number of things: earnings, rate environment, and breadth. Guys, thanks for joining us today. May want to look at this, not going heavy on the contracts in this type of environment like we talked about before. Steve Rhodes is next, and we'll be back again tomorrow. Thanks very much.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.